Welcome to the Law Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Almasri. Welcome back, everyone. On this episode, I interviewed Cherry Chan, who's an accountant. She's been on the show a couple times before, and her husband, Erwin Zito, who was also on the show recently, have started investing in the U.S. I know that's a hot topic these days. A lot of people are looking into doing that. So Cherry mentioned that they closed on their first property in the Texas area, and we talked about some of the pros and cons, some of the challenges, some of the background stuff that they had to do in order to make it happen. So the corporate structure that they used in order to close on it, the tax implications for Canadians investing in the US. I think if you have any interest in investing out there, then you're really going to enjoy the content. And if you do enjoy it, if you're using an iPhone or a Mac, please make sure to leave us a review on the podcast app. And if you're using an Android device, then you can do so on Spotify, ideally. So we appreciate all your support. Thank you for all the years of the people who've been listening and tuning in and supporting the show. It's greatly appreciated. And finally, if you want to connect with me, you can actually go to www.welloff.ca. There is an option to book a 15-minute call there. I'd love to chat with you. I do have a lot of experience with multi-units in Ontario. So if you're not looking to go to the US, you want to buy something in Ontario, I'd be happy to help you as a realtor. So you can just go to the website and check it out. And there you go. Enjoy the episode. Hey everyone, welcome back. I've got Cherry Chan with us today. So Cherry's been on the show a couple times. I think this is probably her third time on, but for those that don't know, she's an accountant, she's an investor. I've also had her husband on the show, Erwin Zito, who has talked, the last time we were together, he talked a lot about investing in the US. So I know you guys have been focusing on that lately. So why don't we maybe just tell me what you've been up to lately, just whatever's going on in your life now.
Yeah, I have been really busy in prepping and gearing up for the US tax filing. Our firm has started offering the service, and we have a flood of people coming in essentially just to get some information about the structure, owning US real estate. And I mean, it is summer, it's supposed to slow down, but nothing really slowed down during this period of time. We're still putting process in place for the next year's tax filing.
How popular would you say investing in the US has become lately? Because I know I've been hearing a lot about it from all sorts of different people. Are you finding that a lot of people are asking you about it now?
Yeah, more so than ever. I guess it doesn't help that the Canadian government is not helping with all their policies. You would know better than me, but I can speak from the tax perspective. They are targeting real estate investors specifically, rightfully so. But at the same time, it is disheartening to see how much they are doing essentially just to disguise their bad spending habit.
Mm-hmm. Yeah, fair enough. So what type of people are approaching you right now about investing in the US? I know it's from a tax perspective, but I'm sure people consult with you before they decide to take action, or most people, I would think. But do you find that, would it be 10% of your clients? Would it be more than that?
I would have to say that a lot of people show interest in investing in the US. It ranges anywhere from, I wouldn't say 10%, but I would say many people have the money, have some money saved aside. If you imagine someone who saved aside $100,000, which is a substantial amount of money. But in Canada, if you have $100,000, or at least in our local market, if you have $100,000, it's not possible to buy a property, like say even in Hamilton, right, with $100,000 down payment. So when they save up $100,000 and there is no way to invest in the Canadian market, and that's when they see these talk and advertisement about buying in the US and how much cheaper it is, how much higher the return in terms of rental return is. That's when they say, hey, maybe I could invest in the US as well, because I also have the 100,000. It seems a lot more possible to purchase a property in the US than in Canada.
Mm-hmm. Yeah. 100,000 would probably go a lot further in certain markets compared to here. And just for the people that are just starting to explore this as an option, where does someone start? Like, if you are interested in investing, what would be the first step from your perspective?
There are a lot of space that you could start, and a lot of groups out there that you can join. But again, just like all the other coaches out there, a lot of them failed in the last few years. I would start small. I start small. I started by buying a single family home. We just closed the property last Monday, I think.
Mm-hmm.
Or last Saturday or something. So it is a small investment. The property that we purchased was $265,000 US.
Mm-hmm.
It requires our upfront investment of about $15,000 just to replace the roof, and we are getting $2,300 of rent. So that's
Okay.
pretty decent.
So $265,000 purchase. Um, and can you share what market that was in?
It is in Texas.
Okay.
This
Okay.
is how bad it is. I have no idea where it is. It is really close to Dallas, as far as I know.
Okay.
And the reason why I don't know is because the deal was brought to us by Share, and it is a off market deal.
Mm-hmm.
So, and the interesting part about this whole deal is that there is a wrap around mortgage. They call it wrap around. Some people call it subject to mortgage. And essentially, we're taking over an existing mortgage.
Mm-hmm.
And it doesn't happen all the time, but it just so happened this wholesale deal happened to be subject to. And we sign off on purchasing, and we sign off on assuming the existing mortgage. And the mortgage doesn't go on our name. The mortgage stays with the seller. And the seller is also the renter now. So they actually turn into becoming the tenant of the
Mm-hmm.
property. And so we are the one that is assuming the mortgage. I think the interest rate was 4.5 or 4.6%.
Mm-hmm.
There's still 20-year amortization, 20-year term left.
Mm-hmm.
In the U.S., local U.S. Residents would be qualified for like 30-year term,
Yeah.
and there's still 20-year term left in this mortgage.
Mm-hmm.
So we will be paying into the mortgage using the money that we get from the rent.
Mm-hmm.
So there's a lot of different things happening in this particular deal, which makes it really interesting. I don't even need to qualify for mortgage myself, which is also always a big plus. And we qualify, like, because it's subject to assumption of the mortgage, we get to assume a lower interest rate. Because as a foreigner to borrow money, you could imagine any foreigner coming to Canada to buy property and borrow money from the bank, they probably charge a higher interest rate because there is nothing to go back to other than just the property itself. So what the same would apply when we, as Canadian foreigners buying a local U.S. real estate. We're just lucky enough to somehow stumble on this deal.
Mm-hmm. Well, I mean, there's luck, but there's also I saw Erwin's spreadsheets when I went over to your office a few months ago. So just to put things into context, this is right now we're in August 2024. I think I saw Erwin back in June, and he had a massive spreadsheet with like tons and tons of data and information. So it's not just luck, right? Um, if we talk a little bit about before you even started looking for this property, you had to position yourself in a way to be able to close on it. So what did that involve? Did you have to open a new corporation? Did you use an existing holdco that you have? What did you do with bank accounts, like that sort of thing?
So I spent a good 4 or 5 years in terms of studying the structure and cross-border structure. And we had concluded that the best structure for most people would be in this limited partnership setup. And the cost to set up is it depends on who you find to set up the structure with. We basically went through Share, the service that the asset management company, they help us set it up. We set up our US limited partnership, and we individually, Erwin and I individually, are the limited partner investor. And there is also a general partner, and the general partner is a US corporation.
Okay.
So the U.S. corporation, being the general partner, is the one that absorbs all the partnerships risk, and is also responsible for the day-to-day management of the limited partnership. So that's generally the structure that we normally set up for our client and also recommend for our clients. Now, you may wonder, like, why are you and Erwan personally owning the limited partnership interest yourself? Well, we saw a couple of properties that were held in personal name, so we had some cash in our personal name to invest. Number two is because of this freaking capital gain inclusion rate change. It also affects that investment in anywhere else in the world. So it also affects us, even though my investment property is in the States. So to maximize or minimize the future Canadian tax that I would have to pay, based on the current set of law, we decided to go with the personal ownership in terms of limited partnership interest.
Okay. So the general partner in your structure, is that a corporation? You said it's a US corporation. Is that one that you own, or is it like a partner of yours that okay, so you own the corporation as well? Okay. So just to kind of break it down, there's you opened a US corporation and that's listed as the general partner, and then the limited partners are you and Erwin personally. There's two limited partners only, and that's the whole structure. Okay. Right. And so um how did you go about opening the US corporation? Is it just a very simple thing that you can do, or is it a bit more complicated than I imagine?
It is quite complicated. There's a few steps that's involved. Um, we currently use I use personally use share service, and they provide that service to their clients. We are starting to offer that service as well later this year, probably starting in the fall, in 2 weeks or so.
Mm-hmm.
And the process is still going through. I think the setup is not where the challenges is who's going to own what. That's being the challenge. Sometimes it's not the individuals being the being the limited partner investor. Sometimes it's the corporation. So it goes back to your particular situation, and similar things as if you were to invest in Canada, should you set up a corporation? It goes back to your particular situation and where the money comes in. What's your long-term goal? Are you concerned with estate tax? So all these questions come together, and that would drive the answer. And those are where the more challenging segment would be, challenging part of the setup, rather than the setup is the setup.
Yeah.
You could say that it's just pressing a few buttons, but it isn't that setup that costs the money. Many people misunderstood. It is the advice that you're getting in terms of like understanding your situation and making sure that you are maximizing your tax efficiency and minimizing the tax liability, future tax liability based on current rules.
Right. And what about bank accounts? So I know, like, I have no experience in investing in the US. I've never done it, but I know I've heard from other investors in the past that they had challenges opening a US bank account. Is that something that was challenging for you, or is that very simple to do?
It was relatively simple, at least in my opinion. Share actually gave me a stack of slides, and in terms of instruction, line by line, what button that I need to click, and then I follow the instruction and then open my bank account relatively easily.
Okay. Was it with like a bank that's also operating in Canada?
No, it was with Mercury.
Oh, okay.
Mercury, which is kind of like an online bank.
Mm-hmm. Okay.
Banking is not their thing, I think,
Right.
which
Okay.
is why they are, yeah.
So what is Share? Is that a software or a company that you worked with, or?
Yeah, so Share is an asset management company.
Okay.
They are supposed to be the tech company, but they do everything. So essentially, what they do is they help us through the entire process of purchase, identify where to purchase, and send us the listing, qualify listing that fit our buy box, essentially our criteria of purchase, and then they help us manage the property. They don't manage the property themselves, but they look at it from an asset manager perspective. Is this a good property to purchase, or is it time for refinancing? Those are the questions that they would answer. And then they would also shop around for insurance for you. So I don't know about you. I know that for me to close a property locally in Ontario, I have to make sure that I call up all the insurance company and set it up, utilities company. They have their team that handles all that already. So we don't have to handle any of that. They also negotiate insurance contract for us. So they do pretty much everything. Their system is advanced enough to do also the bookkeeping for annual filing for us.
Okay. So we covered the corporation in very kind of in very simple terms. Now, can we dive into the tax implications for Canadians investing in the US? What do Canadians need to know? What do they need to do as well, in addition to their regular tax stuff?
Yeah, so great question. I think one of the biggest thing is to understand that Canadians are required to essentially pay tax on worldwide income. So once you understand this, and whether you like it or not, this is what's required. Then once you understand that, then this pretty much apply to everything, whether you invest in Dubai or whether you invest in the US. So let's say you uh, buy a property in the US. In the US, you have to report the rental income because that's located in the US, and the US IRS would also the CRA equivalent in the US would also want a piece of that income, the net income that you made. So you will have to do the local tax filing. Whether you invest in Dubai or in the US, you still need to do the local tax filing. Now, once you finish the local tax filing, because you're Canadian, you're also required to do your own reporting in Canada. So, using myself as an example, using the structure that we just talked about, at the end of the year, we have to do the US tax filing, and then we pay the tax. Generally speaking, there is not much tax to pay because in the US, you can take maximum depreciation, and therefore there is no tax to pay on a day to day basis from the rental income that you're receiving. But on the other side, on the flip side, in Canada, you have to also report the rental income and expenses from the property. So on Erwin and my personal tax return for 2024, we would then report the rental income and expenses schedule from the US as well. So we will have to report it. And for any tax that I pay in the US, I can try to offset the tax that I would otherwise need to pay on the income that I receive from my US rental property on the Canadian tax return. So maybe using an example, on the Canadian tax return, I need to pay $1,000 Canadian tax on the US net rental income. And then on the US side, I already paid $200. So I would take that $200 to offset against the 1,000 Canadian tax that the Canadian government imposed on, and I only need to pay the Canadian government $800. Does that make sense?
Yeah.
So
yeah.
the combined total is still $1,000. Now, on the flip side, if I pay, like, say, $1,200 in the US already, and the Canada side, I'm being charged for $1,000. The entire $1,200 is being offset against that $1,000. We have a negative. You're not going to get a refund from the Canadian government because they never got the money. But the maximum you would need to pay is $1,200 because the $1,200 that you pay in the US already fully offset the Canadian tax that you need to pay. So, and therefore you pay the higher of essentially Canadian tax or the US tax, the combined total. So you're not being double taxed, but you're also not getting away from the Canadian tax system. Now, in higher level, essentially, there's no tax advantage in terms of investing in Canada or in US or in Dubai. Using Dubai as an example, Dubai historically hasn't had any capital gain tax. I think they are implementing some capital gain tax just like starting in June or something. But like, let's say you don't pay any capital gain tax in Dubai and you pay zero in Dubai because that's not part of the regime. So back to Canada, you are supposed to report your income from your Dubai property, whether it's capital gain or whatnot. You sell the property, you get capital gain. Now, you report the income on your Canadian tax. Canadian government will charge you, CRA will charge you whatever you need to be charged, say $1,000. Dubai, you pay zero. So then you have to pay the Canadian government that $1,000, even though you pay nothing in Dubai. So you're not getting ahead by um, investing outside of Canada in terms of tax cost wise.
Hmm. Okay, fair enough. There were a bit earlier you mentioned about doing the two filings, so you have to do the U.S. filing and then the Canadian one. Would somebody need to hire a U.S. accountant specifically for the U.S. filing, or would the typical Canadian accountant be able to do that?
So depending on the service offering of the Canadian accountants, some of them do US taxes, and they may be able to handle the US tax filing for you as well. As a matter of fact, we are going to start offering that service
Hmm.
starting the upcoming year as well. So we would be able to offer the same service. A lot of the Canadian accountants do not do US taxes. And if they don't do US taxes and you want to remain with your current Canadian accountant, you would need to find a US accountant to help you file these tax returns.
Hmm.
Now, I would have to caution you though, when you go across the border, their focus is very much on the U.S. local residents. So you have to be careful in terms of who you talk to because a lot of them are not familiar with cross-border taxes and do not understand the Canadian side of things. And they may advise you to set up a structure that's totally not suitable for
Hmm.
Canadians to begin with. So that's something that you need to pay attention to. Many of them are tax lawyer as well. They're a lawyer. They're not tax lawyer. They set up the corporation and they say, I can set up the corporation for you. I can set up an LLC for you. But you don't want to set up any LLC. So going back to your comment, depending on the accountant, you may or may not need to find
Hmm.
accountants on both sides. And if you do go across the border to find the accountant, make sure you find someone that actually also am aware of the Canadian side of tax implication.
Okay, good to know. And you also, so you mentioned that you set up a limited partnership for your purchase, your recent purchase. Was that just for your personal situation that was the best case, or did you just find that overall as a Canadian, it's best to do it that way rather than purchasing in a holdco, for example?
Yeah, so um, generally speaking, it makes sense for Canadian to set up a limited partnership. Now, you can call it a limited partnership, which is really an investment vehicle, a structure that's being used. The reason why people use limited partnership is because of its flow through nature. Now, what is flow through nature? Essentially, you're buying it on your own. It's the same as buying it on your own. The only reason why you're setting up the limited partnership is because of the limited liability that it could potentially offer. You could like Earn and I would be able to go across and buy the property on our own. That's not an issue at all, personally, directly. But as you know, the culture in America is to sue, whether you like it or not. So is really the reason the limited partnership is just being set up as a way to protect ourselves.
Hmm.
Then you may wonder, why don't you set up a whole co? Well, to set up a whole co, there is the possibility of double taxation. Whereas if I have a limited partnership, the income flow through to me personally directly to avoid that double taxation. So it's important to make sure that we structure it right.
Hmm.
And so you would be able to then avoid paying tax in the US and not being able to claim the tax that you pay in the US to offset against your
Hmm.
Canadian tax.
Okay, so is that what you mean by double taxation? That you can't offset the taxes paid in the U.S. What you had mentioned earlier?
Yep,
Yeah.
absolutely.
Okay. Um, and then I'm not sure if we can talk about this, but I'll ask the question anyway. You can decide. But when you are representing a client, I know it's still early. You haven't exactly maybe figured out all the details. But are you going to be charging like a separate fee just for the U.S. filing and the whole U.S. investing side, or is it going to be wrapped up all into one for your clients, the ones that let's say are doing their local taxes with you as well?
So our goal is always to do both. So we're going to be charging uh, separately, essentially. We are handling everything, but the US tax side would charge the US dollars in US dollars, and then the Canadian side we're doing it in Canadian dollars.
Hmm.
There is, like I mentioned, using myself as an example, I have to do for our limited partnership, and our Erwin and I, we both would need to do the filing in the US. And once we do the filing in the US, we still have to come back to Canada and do all the reporting as well on the Canadian tax return. So on the Canadian tax return is as if I own the property, a local property, I still need to do an additional tax return, additional form just for that particular property and do the reporting. So yes, there are forms that are being already done, but at the same time, I still need to do an additional form. And there's additional reporting requirement on your Canadian side when you own something not within Canada. So there are increased complexity in the Canadian tax return as a result of owning properties outside of Canada.
Right. And on the Canadian side, are you charging, like this is kind of separate from the US investing thing, but do you charge per corporation as a fee, or is it just one fee? You assess the person's their whole portfolio and how many corporations they have, and you just kind of charge one set fee based on that?
We give them a quote, and we build it based on the ground up, essentially how many filings that you have to do,
Hmm.
and roughly our costs associated with filing each as well. And obviously, the more complex the structure, the more filings that needs to be done. And the more filing that needs to be done, then the higher the cost it would be.
Sure. Okay. Okay. Because I know some accountants charge per corporation, like they might do kind of an annual fee based on the number of corporations you have, and then some might look at everything, right? Um, so I think we covered a lot of the basic stuff. Is there anything else that people should know? Things that you've come across in your experience investing in the U.S.?
I have to say my sample size is really small.
Mm.
So I like it simple, and I like it, I call single family home as uh, an asset class. And a lot of people love to buy multiplex and apartment building. And kudos to them, they like to do that. And I personally like single family home as an asset class, and it's easy because of this asset management company. It's easy for us to manage. If A lot of the time, what just like investing locally, you need to have a team, and I'm leveraging this asset management company's team. Um, if you are starting out as a brand new investor and buying in the US, and if you're buying apartment building, make sure that you know someone that knows all these local contractors. I think it's a little bit harder to manage every time you are investing outside of your, I would say, comfort zone. This is no different than me. Last year, I bought a business in Ottawa, primarily based in Ottawa, and I have to travel to Ottawa all the time. And and that's just my personality, because I need to see the clients, I need to build that relationship. And to me, if you're buying a property or like a 20-plex or 20-unit apartment building in, say, Cleveland, if it's me, I would probably show up, check out the local place, make sure that things are being run properly. That's common sense operation, essentially managing your portfolio. That's where the challenge comes in. So unless you have the local team and someone to show you the path, it becomes a bit more challenging. The second thing that I noticed, that could also be a bit challenging, is like opening bank account, signing the legal document. We were trying so hard to sign online with a notary, but their online notary system's not designed for Canadians. So all their security questions I would not be able to answer. They just
Hmm.
ask those questions, but none of them apply to me. But then for some reason, I can't pass the screening. So all these nuances is something that I had not experienced before. Also, using subject to the deal that we just described is some newer concept for us, and we are not We are not like I'm learning as we go. These are rare deal, and it doesn't happen in Canada. So be open minded. But they do have something really similar to Canada. Everything is just using different terms. Instead of using a lawyer to close, they use someone called title company to do closing for you. So
Mm-hmm.
not necessarily a lawyer, but essentially they service the same function.
Mm-hmm. Yeah. I'm sure there's a lot of hurdles and stuff to figure out. Did you have to fly into the US to sign the documents, you said, because you couldn't do it online?
Yeah, I was waiting for 2 3 days while I was on vacation to sign because every time I couldn't get into through the security question, it bumped me for another day.
Mm-hmm.
Try again in 24 hours, and then 24 hours later, I try again. It didn't work. So we ended up going across the border in Buffalo.
Mm-hmm.
And meeting up with a notary, a mobile notary. They can just meet you at the closest cafe to the border,
Mm-hmm.
sign everything, super easy, done and over with. It
Mm-hmm.
turns out it's best to drive over across and then sign the paperwork there.
Yeah, yeah, that's cool that they have that mobile option for somebody to just come meet you. Maybe just to finish things off, any other challenges that you came across throughout this process that you might be able to share?
I think we have been very fortunate because, like I mentioned earlier, like I don't have to deal with the insurance company. Otherwise, I have to call the local insurance company.
Mm-hmm.
I don't have to deal with the utilities company. Otherwise, I'll have to call them individually to set up all these things. We have been very fortunate with our own journey because of Share, the asset management company that has handled all of that. Rather smooth sale, I would say, other than the signing of the documents that took a while because we were trying to cheat the system and not going across the border. For normal people that did not try with the online signing, everything else was like easy.
Okay.
And I mean, Erwin also, like you said, Erwin does a lot of research already. I just trust that the research that he did is great and trust that Share provided a good deal to us. We did the background research as well. So we did the number crunching and everything. It looks great.
Mm-hmm.
But at the same time, the process is just understanding what's presented to us and do our own due diligence. And then like I said, I've done on and off the last 5 years. I've been trying to do research on the best structure and get a better understanding for myself and our clients. So I feel fairly comfortable
Mm-hmm. Great.
with our purchase.
Yeah, yeah. Well, I know Erwin was really excited about it, and he said that this is kind of the future for you guys. You plan on growing your portfolio there and continuing. So, I'm glad you were able to get this first one down. I look forward to hearing about how it goes. And before we end things, you just want to tell everyone how they can reach you, and it's obvious, but the services that you're providing.
So we work with primarily with real estate investors, everyday mom and pop, and investing in real estate or want to invest in real estate, whether in Canada or in the US. And you can reach us by emailing us admin at cccpa.ca or visit our website realestatetextips.ca.
Great, Cherry. Thank you as always. I appreciate you doing this, and we'll talk again
Thank
soon.
you.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.